let's dive into demystifying stocks and the market. A stock represents a piece of ownership in a company. When you buy a stock, you're actually buying a small portion of that company. The stock market is essentially where these stocks are bought and sold. It acts like a giant marketplace, connecting buyers with sellers. Imagine a farmer's market, but instead of fruits and vegetables, companies are selling parts of themselves. This selling means offering shares of stock to the public. Investors then are buying these shares to own a piece of these companies. This buying and selling of stocks determine the stock's price. When more people want to buy a stock than sell it, the price goes up. Conversely, when more people want to sell than buy, the price goes down. This fluctuation is a fundamental aspect of the stock market. Understanding these basics is crucial for anyone wanting to enter the world of investing. It is not as complex as it may appear. It's simply a matter of buying and selling pieces of companies, driven by supply and demand, just like any other market. Now, let's talk about the significance of stock exchanges and investing. Stock exchanges are organized marketplaces where stocks are traded. Think of them as the trading floors you see in movies, like the New York Stock Exchange or NASDAQ. They provide a platform for buyers and sellers to connect and trade stocks efficiently and transparently. Why is investing in stocks important? Because it offers individuals a chance to grow their wealth over time. By purchasing stocks, investors become part owners of companies. As these companies grow and become more profitable, the value of their stock tends to rise, benefiting the investors. Investing in the stock market is not just for the wealthy. It is a powerful tool for anyone looking to build a secure financial future. You don't need to be a financial expert to start. With a little research and understanding, even small investments can grow significantly over time. Investing does come with risks, just like any other investment avenue. However, it's crucial to remember that investing is a long-term game. Short-term fluctuations are normal. Over the long run, the stock market has historically trended upwards, rewarding patient investors. Lastly, let's explore the power of compounding in investing. Compounding is the magic behind investment growth. It's a fundamental concept that can significantly enhance your financial returns over time. It's the principle of earning interest on your initial investment and then earning interest on your accumulated interest. This cycle of earning interest on interest is what makes compounding so powerful. In simpler terms, it's like your money is making more money for you, and then that money makes even more money, and so on. This continuous cycle can lead to substantial growth in your investments over time. Let's illustrate this with an example to make it clearer. Imagine you invest $1,000 in a stock that yields a 7% return annually. This means that at the end of the first year, your investment would grow by $70. After the first year, your investment grows to $1,070. Now, instead of just earning interest on your initial $1,000, you earn interest on the entire $1,070. The next year, you earn a 7% return on $1,070, not just the initial $1,000. This means your investment grows even more in the second year. This snowball effect continues year after year, leading to exponential growth. The longer you keep your money invested, the more pronounced this effect becomes. The longer you stay invested, the more potent the effects of compounding become. This is because each year, you are earning interest on a larger and larger amount of money. This is why it's crucial to start investing early. The earlier you start, the more time your money has to grow through the power of compounding. Even small contributions made consistently over time can accumulate significantly due to the power of compounding. For example, investing just a small amount each month can lead to substantial growth over several years. Investing in the stock market, though it may seem daunting, is a crucial step towards financial well-being. It allows you to take advantage of the power of compounding to grow your wealth over time. It allows your money to work for you, benefiting from the phenomenal power of compounding. By reinvesting your earnings, you can maximize your returns and achieve your financial goals more quickly. Remember, it's not about timing the market, but rather about time in the market that yields the most favorable outcomes. The longer you stay invested, the more you can benefit from the power of compounding. So start investing early, stay consistent, and let the magic of compounding work for you.